Hello everyone, welcome back. Uh, I forgot the name who was going to answer for the third uh, adjustment or whatever you call it. Who was there? Who was the student who was going to answer this third question, please? Third adjustment.
So,
Yes, please.
the utility expense will come in which? Direct or indirect expense?
Which expense? Sorry.
Utility.
If it is a utility for the see, let's say if you're in a factory. So if
Yes.
a utility is used so that you can produce the goods, then it is a direct cost.
Okay.
But again, I mean, if you it only matters when when you can say that the quantity of the utility you are using, you can say that this portion is becoming the part of the asset or the goods you are manufacturing. If you cannot map it, if you cannot trace it to the cost object, it is always indirect cost. It is always going into the profit and loss account, of course. So it depends upon if that utility is very much a part of the production cycle, and you always know that for manufacturing 1 kilo of, let's say, sunflower oil, you use 100 gram of this oil or 200 grams of this oil. If you could figure out that problem, and you can say that with surety, that then it is a direct cost. Otherwise, it is indirect cost, right?
Sir,
Hello.
in this case, it will direct or indirect?
In this case, it will be indirect because we do not know the business, so it is indirect cost.
Okay, sir. Thank you.
Thank you. So shall we start? I think very less students are there, but fine. Let me start talking. Can you? The student, I forgot his name. Who was going to answer this? Sarthak was there. I don't know. Who was going to answer this third adjustment? Hello. Please everyone mute yourself. Siddharth was there. Okay, guys. I'm just asking randomly if someone else because I don't think that student is there right now. Sushant was there. Sushant, did I ask you that question? Third adjustment. Sushant. Hello. Why everyone is silent? I don't understand. Anyways, let me ask. Tushar. Tushar, are you there? Tushar. Tushar.
Yes, sir. Yes.
Huh. Can you answer the third adjustment, the interest on notes? Please participate, beta.
Um.
What do you mean by that? Can you explain the transaction to me, beta? The third adjustment on the right hand side. If you,
Sir,
huh.
I don't understand, sir. This one, sir. Third one.
Okay, okay. So, what is your name? Tushar is your name. So I will ask you the fourth one, right?
Yes.
So stay.
Yes.
I mean, prepare yourself for the fourth adjustment
Okay,
or
sir.
transaction. Yes. So,
Okay.
in the meantime, that student has come back to, or shall I ask someone else? There are two Yash Gupta, I think. So any one Yash Gupta can answer third transaction, please. Interest on loans. Hello, Yash Gupta ji. Guys, can you hear me or not? Can you tell me that?
Yes,
Yes,
sir, we
sir,
can
we
hear
can
you.
hear
Yes, sir.
you.
So we can hear you.
Okay, Vikas Dugar, can you answer the third one? Vikas Dugar.
Yes, sir.
What is the third transaction? Can you explain, beta, please?
Sir, on the interest note payable is like 20,000 where we charge interest 9% annually. So according to me, the entry should be interest payable account, interest account year to interest payable.
So yes, very good, beta. Remember, in this transaction, the interest on loan is the expense for you. Understand? Because every month we are preparing this financial statements for 1 month. That is the month of July. Remember that. So we are going to record transactions related to the month of July. That's it. Now, interest notes payable are 12,000 rupees, and the interest on that is 9% per annum. Now, uh,
Hello,
yes, please.
sir,
Hello.
sir, am I audible?
Who is this?
Sir, Sparsh, thank you, sir.
Sparsh, tell me, beta.
No, sir. I was just wanted to make sure.
Okay, yes. Interest on notes is an expense, understand? So the journal entry is because it is an expense, interest on notes account debit or interest expense account debit. At the same time, remember, you are not paying the interest for this 1 month interest, right? So if you are not paying that, it is still payable. It is your liability. So the journal entry is interest expense account debit to interest payable. Can someone help me to calculate the interest expense because the amount is not given here? Can someone help me solve this? How do we solve this? How do we calculate the interest on this? Tell me. Yes. How do we calculate the interest? Interest is 9% per annum.
Na-
Yes.
Sir, notes payable is mentioned in the transaction, so
Mhm.
maybe with the help of that we can find out the expense of interest.
Okay, so very good, beta. So to understand, the loan is the notes payables are basically how much they are. The amount is 12,000. Remember,
12,000,
now
yeah.
12,000 is
9%.
the loan you have taken. The expenses. So 12,000 is not the expense, but 12,000 into 9%. And remember, we are preparing this financial statements for only 1 month. So you also need to adjust for the months beta. So the answer is 12,000 into 9% into 1 by 12 because we are only preparing the income statement for 1 month. That means the expense of 1 month has to be captured. So interest on notes is 9% per annum. So 12,000 into 9%. And someone has already solved that in the chat box into 1 by 12. So that is the interest expense for this month. So what is the journal entry? Once again, I'm repeating because a lot of students are joining very late. Guys, this is not done beta. You cannot join anytime you want. The time has been decided by the program office. So please join on time. This is the last session, so I'm not saying anything as of now. But when the regular session starts, Nirma University is very strict with this. So they may lock the classroom and we may not even allow you to after the time. So please join on time, please. So yes, so the journal entry is interest on Sushant, your put yourself. Yes. So interest expense on notes account debit or interest expense account debit. What was the amount? 12,000 into 9% into 1 by 12. How much is the amount?
90 rupees per month.
90 rupees. So 90 rupees is the expense. So interest expense account debit 90 rupees. So interest payable 90 rupees. That is the journal entry. So remember what we are doing. By this is a trial balance. And now we have transactions and events which are not captured into the trial balance. So because these are events, they are also required to be captured and you may be preparing trial balance one more time after this. And that is called adjusted trial balance. Right? You need not remember for exams, but I'm just telling you in reality that is what happens. Company
Sir?
prepares trial balance. Just a second, beta. Companies prepare trial balance first, and then they capture the events, and then they prepare another trial balance that is called adjusted trial balance. Yes, your question. Please ask me, beta.
Sir, why are we dividing it
Excuse
by
me,
12?
sir.
We
Uh,
might have to pay it annually and
no,
that
but so in this case, see, even when you are going to pay annually, understand. We are preparing this income statement for how many months, beta?
for this month only.
This month. So according to accrual concept, should we capture the interest on loan or not, interest on notes or not? Tell me. Of course, because we are
Yes,
using
sir.
this money. We are using this money, right? So you are getting a bit technical. There is a term called interest accrued but not due. That is the term we may be using. Interest accrued but not due. So interest may not be payable right now, but interest has been accrued because of accrual concept. So the in simple terms, interest expense account debit to interest payable. That is the journal entry, right? Okay, last transaction. I will also show you how they are recorded in T accounts. Income tax liability. Someone was going to answer this. Who was there? I forgot his name. Tushar.
Yes, sir.
Yes. What is the journal entry for this bit of income tax liability? Remember, income tax hasn't been accounted yet in the trial balance you see on the left hand side. So income tax has not been accounted. Now suddenly you have got to know that this is your liability. You must have received a letter from the income tax, or you must have got to know on your own that this is the liability for this year. Is it an expense or not? Tell me, Tushar.
Um,
Can you really run your business without paying income tax? Tell me.
no, sir.
So it is an
We have
expense
to.
because you need to
Yes, sir.
incur this every year. So you may be arguing that say income tax is not an expense. Understand the simple logic is You cannot run your business. So any expense incurred to run your business to earn a revenue is an expense. So income tax is an expense. Now here it is liability. Why? Because it is not been paid. So the journal entries, please tell me, Tushar, now.
Uh,
Income tax expense account debit, how much? 1146. Hello, Tushar?
sir.
Income tax expense account debit 1146 because it is an expense. At the same time, it is not payable. So to income tax payable or income tax liability 1146. So all these 4 transactions I have recorded like this. You can see we have discussed this already, but I'm just showing you how it looks. So rent expense account debit to prepaid rent account. So now what happened, understand? Prepaid rent account had a balance 2250, but now because it is becoming an expense, there is zero balance in the prepaid rent account. So if I make a trial balance now after recording this transaction, prepaid rent account would have a zero balance and rent expense will have a 2250 balance. This we had discussed in the last class. So what I am saying is that after the accounting events, transactions, the balance is made. In this case, the prepaid rent balance has become zero and rent expense has become 2250, which was not there, right? So let us look at the second transaction as well. Depreciation for the month of July, 180 rupees, right? Now the journal entry we had discussed, depreciation is an expense because whenever the resources are used and the value of resources goes down, that has to be captured or that has to be recorded as an expense. In this case, it is a depreciation expense. Depreciation expense account debit 180 to accumulated depreciation account credit 180. But I hope you understand the posting part. You record the name of the other account for cross referencing, right? So depreciation expense account is debited and the closing balance of depreciation expense account is 180 and accumulated depreciation account balance is 180. Anyone has any question? Please ask me. Hello? No one has questions? Okay. Similarly, interest on notes we have also discussed. Interest on notes, interest expense account debit to interest payable or interest on notes payable. So that is also been recorded. Now you have a interest expense balance 190 rupees. See, in the trial balance before this, you did not have a balance. Now you have a balance of interest expense because as per accrual concept, we have recorded this. And interest on notes payable also, there is an account for that. So it also has a balance. So interest expense has a debit balance, interest on notes payable has a closing balance, credit balance. Right? I hope I'm not going too fast because we have already discussed this, some of this in the last class. Income tax expense, as I mentioned, it is an expense. So income tax expense account debit. At the same time, it hasn't been paid yet, and it has to be paid. So there is a liability. So income tax expense account debit to income tax payable. So income tax expense is having a debit balance 1146. At the same time, income tax payable is having a credit balance 1146. Anyone has any question till this point? If you feel that I have gone a bit too fast, is it only me who cannot see the screen? Anjali, maybe. So what I can suggest you, Anjali, if you still cannot see, you may rejoin beta. That happens sometimes. You leave and then join right away. That happens sometimes. Yes. Sorry, sir. Sorry, sir. Why is first? Okay. Okay. 90 per month. That is for what you are saying. Yes. No one has any questions till this point? Please mention no or yes in the no questions. No questions. Please mention no. Okay. I hope I'm
Sir,
not going. Yes, please.
sir, in this transaction, cash account will also credited.
Why, beta? You haven't paid yet. So why the cash account would be credited? Cash would credit only when cash is going out of the business. Cash hasn't been paid, beta. So see, it is like this, beta. I have incurred an expense. Let's say I went to the tea stall and I asked for a cup of tea. And I'm saying that I'll not pay. Chacha kal de dunga. See, you understand what happened? So I have taken the tea. So there is an expense of tea expenses, but I haven't paid yet. So I will credit his account because I have to pay him. Similarly, in this case, you are required to pay the taxes to the government. Which account is representing the income tax authority, income tax payable account? So that is the liability you have. So you have an expense or you have a liability. Please, all of you remember this for sure, especially non-accounting students, that cash is, not important when you are recording the transaction. Please focus on my words, right? Cash is not important for recording the transaction. Cash is important for business, but when you are recording the transaction, the cash flow doesn't matter. You record the transaction when it is accrued, when the transaction occurs. Why is that interest expense in tax payable account? That is because I make silly mistakes. That's why. I copy paste the accounts and then change the names, and I must have forgotten. So I'm so sorry for that, Tanmoy. Tanmoy, that is the right way to say it, I guess, right? Tanmoy, fine, beta? Yes. So you see, all these 4 transactions now will change the trial balance, and this is how the trial balance would look like. And I have also shown how it will appear. So prepaid rent balance was 2250 earlier. Now it has become 0, and rent expense is 2250. Right? Similarly, depreciation account and accumulated depreciation account wasn't existing before. Now it exists. Similarly, interest on notes and interest payable were not existing. Now they exist. So the trial balance has changed. Right? Similarly, income tax expense and income tax liability was not there. Now it exists. So before we continue, all of you please say this very fast. Which one is asset, which one is liability? Because we are going to prepare financial statements one more time for this question. This is the last question for class discussion I'm saying. Then I will take questions. Yes. So cash is, everyone agree upon this? What is cash?
Asset, sir.
Asset. It is a current asset. Asset. Very good. What is accounts receivables?
Asset.
Can someone explain what is accounts receivables?
Asset, sir.
But can you explain why it is an asset, beta?
Sir, because it is in the future we will be receiving money from our debtors.
Yes, so there is an economic benefit of receiving the cash in the future from this accounts receivables or debtors. So they owe us. That's why. Very good. So it is an asset. Very good. It is a current asset again. Inventory.
Yes,
It is an
current
asset.
asset.
So when I say inventory, it is goods stock, right? The goods that I'm selling,
sir.
the goods for which I have started the business. Very good. I will
Yes,
ask
sir.
someone else now, Rashi. Please, I request you to mute, please. So rent expenses. Now let me ask. It's so difficult to navigate between these windows. Okay, Rashi Jain is waiting in the. Rashi Jain is there in the class of our classroom. Okay. What is rent expense? Is expense? We know that. So prepaid rent was an asset. Now it has become an expense. Now you see the relevance of equipment at cost. Rashi, Rashi
Yes,
Jain.
sir.
Rashi.
Okay.
So Rashi, tell me, what is equipment at cost? What does it mean? We have discussed this in the last class. What is equipment
Yeah.
at cost?
Sir, it is our fixed asset and it is recorded at cost, means at the purchase price plus the installation charges and everything, but the depreciation has not been charged in the
On the asset,
account,
depreciation has been
on the
charged,
account.
but you have created another account for that,
Yeah,
right?
for that we have created another account. We have not adjusted it there.
Wonderful, wonderful. Thank you so much, beta. So equipment at cost is 21,600. So see, guys, when you are following this approach, every year the equipment would be shown at cost, and the depreciation will get accumulated or gets gathered in the depreciation provision or accumulated depreciation account, and it provides more information to the stakeholders. So the stakeholders as well as the owners know that what is the purchase price or cost of this equipment minus what is the depreciation till date. So from that, company can figure out when the machine is to be bought next, right? What is the life left of this machine or the equipment that you are using? So because it provides more information, it makes sense to show both the accounts cost. So equipment at cost minus the accumulated depreciation on equipment. That is a contra to asset. Always remember, it is not an asset, but it is not anything else also. So it is a contra to asset. What is accounts payable? Let me ask Tanya G. Tanya, please. Tanya Handa, I guess. I don't know. How do I say this name? Yes.
Yes, sir. Yes, sir.
What is accounts payables, beta?
Sir, it will be a liability.
It is a liability. Why it is a liability? What does it represent? Tell me.
Sir, it is representing what further we'll have to give it to the parties that we'll have to pay.
So amount payables towards outsiders, towards third party. That is what it means. So you must have
Yes, sir.
purchased goods. You must have purchased an asset on credit, and for that, this amount represents a liability. Very good. Very
Yes,
good.
sir.
What is notes payable? Once again, can someone repeat? What is notes payable? Darshana is saying no. What is no, beta? Darshana, what do you mean by no? Darshna Jha, please. A written promise, okay. So notes payable is a kind of a money raised from public, guys. It is a liability, of course, right? It is a liability. Do not take this like a bills payable or something. Notes payables are kind of a loan, money raised from public, but it is a liability because there is a promise to repay the money on time, and there is a
Sir,
promise.
we can say short-term loan, right?
Short term. It is generally short term, of course. It is short term.
Sir, treasury bill.
Sorry,
Sir, treasury bill.
treasury bills. What is treasury bill? What is treasury bill, beta?
This is
So you said
instrument, 1 year instrument.
Okay. So treasury bills, but remember, treasury bills you can never issue, beta. That is why I was asking, what is treasury bills? Treasury bills are issued by the government. So when you are as a businessman investing in that, that is an asset for you. Notes pay. So in this case, notes are you are raising money from public with the promise to repay on time. It's a negotiable instrument here. It's a promise to pay the money. In case of what you say, a treasury bill, you are government is raising money from you. So for you, it is investment. And treasury bills are also called zero risk. It doesn't have risk. It has zero risk, risk-free investment avenue. Right? We all know that. Yes. So notes payables are liability. Yes, very good. Yes. Then we have paid in capital. What is paid in capital? Equity. Very good. It is equity capital. Wonderful. What is sales revenue? It is revenue. We all know that. Cost of sales also we have discussed. It is a direct cost, right? So then we have wage expenses. What is wage expenses and utilities expenses? Wage expenses are expenses incurred or the salaries paid to the wage workers or laborers, right? Then we have utilities expenses. Again, utilities expenses are indirect expenses. Someone is saying direct expenses. Wage expenses are direct expenses, of course. Okay, fine. Again, depends upon the business and kinds of business we can classify. So it's okay. Never mug up like wages are always direct expense, because if the wages are paid for, let's say, supplying goods to someone or shifting the asset from one place to another, or for some miscellaneous work, then it could be an indirect expense, of course. But in this case, the amount is really large. That means it is a direct expense, of course. Right? Then we have utilities expenses. Again, depends, but it is generally indirect expense. Depreciation expense is, again, if the depreciation is on the asset which is used to produce goods, then it is a direct expense. Otherwise, it is an indirect expense. Interest on notes is a financial expense, a finance charge. It is always indirect expense, because interest on note has, or interest on loan has nothing to do with the goods you are selling or goods you are producing. It is a financing part. It is not a operating part. So interest on notes or loan is always a financing charge, or you can say it is an indirect expense. Similarly, income tax expense is also indirect expense. So based on this, you can classify like this. You see, and based on this classification, you can easily prepare income statement and balance sheet. So I have some work for you guys, because I don't want to do all the work. Right? You can see how much work I'm doing for your class. So why don't you prepare income statement and balance sheet from this? We have 15 minutes time we can spend on this, and then I'll take questions. Yes. Everyone start preparing income statement and balance sheet based on this trial balance, adjusted trial balance, please. I hope all of you are listening to me. All of you are following me?
Yes,
Reply
sir.
with yes, yes.
Yes, sir.
So please
Yes, sir.
prepare
Yes,
income
sir.
statement and balance sheet. Yes, yes. Please, please. I'm muting everyone. All the assets would go to balance sheet. All the liabilities would go to balance sheet. We know that. Equities would go to balance sheet. Right? Incomes and expenses will go to income statement. Okay, someone was saying wages are direct expenses. Who was that? Devansh Kanuria. May I chat with you, beta? Devan, see, so you were saying that wages are direct expenses, but see, in this question, Pizza at Campus is the business name. Now, it does not seem that wages are representing the expenses of those who are making pizzas. Right? If they were a part of that, then wages expenses would have been added in cost of sales, because cost of sales is representing the product cost or direct cost entirely, including all the direct expenses. I don't think wages expenses in this case is a direct expense, so we will take it as indirect expense, right? Just because the cost of sales is given to us, and cost of sales always represents direct expenses, so it doesn't, in this case wages are not direct. Make sense, beta?
Sir, how to differentiate if the wages are direct?
In this case, how did we define beta? In this case, how did we define? Tell me.
Sir,
In this case,
also I still think that
in this
wages
case, the cost
should
of
be
sales
direct
is given to us, right? In this case, the cost of sales is given to us. Cost of sales is representing the total direct cost. So if the wages expenses are given separately, that means they are not given, they are not a part of cost of sales. That means it is an indirect cost. In reality, you always know, in certain businesses you may be required to figure out on your own. So as and when the case comes, I will discuss with you, right? But you always ask, I know the information is always limited in the trial balance, but sometimes by looking at the name of the business, by looking at the activity of the business, you can figure out. In the future sessions, we are going to take cases, and in cases you know the business of that particular company, what activity they do, and based on that we can easily say what is that extent. So in reality, you always know. Sometimes questions may not tell you everything, but it is still, I mean, we can, based on our experience, based on our judgment, we can say that this is direct or indirect. So in this case, we said based on cost of sales, our judgment that cost of sales does not include, that means it is an indirect cost. So sometimes we have to make a judgment based on information available, of course. Right? But also look at the name of the business.
does
Yes.
this does
Sir,
this mean
sir,
the
I
cost
had
of
a
sales is
doubt.
given
Ha.
in
Some,
balance sheet?
is it Shreya? Right now Shreya was talking. Rashi
No,
Modi was
sir,
talking.
Rashi.
Rashi, Shreya, I will come back to you. Let this person complete his question. Then I will come back to answer your question.
Yes, sir.
Please.
Yes,
Ha.
sir.
Who was there,
Sir,
please?
if somewhere cost of sales is specified,
Sorry.
and
Ha.
if somewhere cost of sales is already specified, and
Ha.
later on wage expenses also be mentioned, so that means that wage expenses indirect.
Huh, that is what I was saying. Yes, of course, of course. That is what I'm saying. Cost of sales is calculated already for you. If it was not calculated, then you make a judgment. Right? But again, look at the business. The business is Pizza at Campus, right? So Pizza at Campus, I'm assuming that they make pizza at some campus, some college campus. Maybe they have opened a small something for having snacks and food and all that. So because the clarification is not there and cost of sales is given separately, we can easily say. If it wasn't said, then I would assume that those wages are actually producing pizzas and selling. In that case, it becomes direct, because you know that how many pizza, I mean, which pizza is made by who, or which entity, which worker, right? So in that case, it is a direct. Yes. Can you explain treatment of rent again? Which rent, beta? Rent expense. Okay. See, last month we had paid a rent for this month. So last month it was prepaid. Understand? Right? It was an asset because last month, for last month's income statement, the economic benefit is exceeding that last month. But now in this month, that last month rent becomes due because you have used the premise for this entire 1 month, and when you are using the premise for entire 1 month, you are consuming it, you are using the resources, so it becomes expense because you are using that to produce pizzas, right? So last month prepaid rent which was paid for this month becomes expense this month. So the journal entry is, because it is expense account debit, and now that asset has converted into expense. So asset is not there anymore. Asset is going out of the business. When assets go out of the business, you credit. So assets account credit. So prepaid rent account credit, rent expense account debit. So why is this so? Because in reality, this is what happens, right? Sometimes we do not look at the minute stuff, but it is always like this, that initially whenever you make the payment upfront, it is always prepaid, and then it becomes expense. But that difference is so minute that you don't care. It is like this, beta. I'm giving you 1000 rupees to supply maybe sugar at my premise. You are running a provision store. In that case, I'm paying you front. but you will not record that, it is an unearned revenue, and after 1 hour you record that as revenue. It doesn't make sense, because we don't prepare balance sheet and income statement after every transaction. We should not do that, because then we cannot put our efforts on the business. So that is why it creates confusion sometimes. But yes, in this case, it was last month, and we had prepared the trial balance last month. That time it was prepaid rent. Now with this month, it is a rent expense. Yes. Sorry for long discussion and all that, but just to make it clear.
Sir,
So,
Thank you, sir.
yes, yes. Please, others ask question. Please, Rashi was also there. Please ask question, Rashi.
yes, sir. Sir, notes payable is a liability, but is it a short-term liability or long-term, or it can be both
It
depending on
could
the
be both.
situation?
It could be both. When the
could be both.
loan, see, in different countries they use different terms for things, right? So because this question is derived from American illustration I have made, so of course the terms you may see are quite frequently used in America, right? Just like, I told you common stock, if you remember, I told you treasury stock and all that, right? So
Yes, sir.
similarly, notes payable are generally short term in America, of course, right? It is a short term.
Okay, sir. Okay, sir.
Yes. No one has questions. So what is the income statement profit? Can someone tell me?
So 4584. I'm good.
4584.
Can you see the answer?
Yes, sir.
Yes. So all of you, please, very good, very good. A lot of students have attempted. Very good. So, guys, I'm not saying this like a strictly right now, but understand that if you are not focusing in this classroom, online classrooms, if you're not following me, if you're not trying to answer these questions, or you are not a part of this discussion, then you may miss out a lot of things that may help you during the regular course. And trust me, when the regular course or term one sessions would start, you will have a lot of sessions every day, and you may not be able to ask after every doubt, or you may not be able to ask every concept that you did not understand. You may not have time to ask me, right? So use this time in the best possible ways, right? Please, please do that, because you will have a lot of assignments and practical quizzes for every course. So sales is 36,600, COGS is 18,000, so gross profit is 18,600 minus other expenses. All the expenses I have taken, that means 12,870, and income tax I have shown separately. You can also club it. That is totally fine right now, because I'm not emphasizing too much on form, right? I'm focusing on the concepts, not on format, right? So net income is 4584. This is coming from classification that we have just made. What is the balance sheet total? Can someone mention?
39,420.
420.
Is also right. So see, all the assets, liabilities, and owner's equity have gone into the balance sheet. So accounts payables, notes payables, accrued interest on loan, accrued on, again typing mistake, accrued interest on loan, income tax liability. All these are liabilities. Capital and retained earnings are basically equity. Similarly, cash, accounts receivables, inventory, prepaid rent are current assets, and equipment is the only non-current asset we have. I hope everyone understood this question.
Yes, sir.
It was very simple.
Yes, sir.
Please ask me a question. Yes.
Sir, you told that we will not adjust depreciation against the asset, but in the balance sheet you are adjusting it, na?
I'm not adjusting. I'm just showing it. I'm not adjusting. Adjusting means I'm deducting it and showing the net figure to you, beta. So in the next year, I'll just show you how it will appear. Let's say next year the depreciation is accumulated depreciation is 360. Let's say. So this is how it would look: 21,600 like this.
Yes, sir.
Minus, you show 360. So you are not adjusting. Adjusting means you are deducting. You are not deducting, right? You are showing both.
Okay.
Make sense, beta?
Okay.
Sure.
Yes, sir.
And this is the correct way, because tell me which one provides more information to you, 21,420 or showing both, and showing all three, rather I should say, showing all three, right?
Yes, sir.
Yes. So as a businessman, you always know how many years life is left for the machine based on the value left and based on the cost of the machine. So that is why it is important, right? Yes. So no one has questions, sure? No one has questions? No one has questions, guys? So, some students, I have also put third question, but I don't know whether you want to do this on your own right now or not. You want to do this on your own right now?
Yes, sir.
So please start doing then. We have 15 minutes time. I am asking you to prepare income statement and balance sheet from this question. Please do that. And in the next 15 minutes, I will take questions from the earlier sessions. I will summarize the entire course, and I will also ask maybe some MCQ questions in the chat box, and you answer. Yes. So please prepare. I am there sitting here. Office equipment is what? Tell me, guys. Office equipment is an asset. Accumulated depreciation is an asset. Contra to asset. Office supplies are what? Tell me.
Asset.
Asset. Debtors.
Asset.
Cash.
Asset.
Prepaid rent.
Asset.
Asset. It is a very good. Unbilled revenue.
Liability.
Revenue is a debit balance, but there is a debit balance given, beta. What is unbilled revenue? Don't get confused with unearned. Unearned and unbilled is different. It is a debit balance, so it is an asset. It means that you can someone give me an example of unbilled revenue, or I should make up the example? Please participate, guys. Anyone?
So when the
Please.
customers have paid us for services, but we have not provided the services yet.
Sorry, फिर से I did not get you, beta. Sorry.
So when the customers have paid us for the services, but we haven't provided the services yet.
No, they haven't paid. Understand? Do not focus on the cash part, beta. But good attempt. Good attempt. I'll come back to you. Who else was there, please?
Sir, we have provided the services.
We have supplied 101 products, but actually we have built 100 products. So one product is unbuilt.
Okay, good attempt. Good attempt. Rashi Modi, please.
Sir, I don't know if that.
Okay,
I only gave the wrong answer. I said liability.
Okay, fine. Who else was participating? Please participate. Shubham.
So we have provided the services but didn't receive the cash. That's unbilled revenue.
Sir, for example, if we are providing security services and some of my guards, like I provide security service, and for a month I have allotted a guard to the company, and I have and it's the end of the month, but I haven't billed the company for the security service or for the guard.
Absolutely right. Absolutely right. You are absolutely right. Right. See, remember, you have provided the services. In most cases, that is what happens. Understand? See, you may have an estimation, but after the service is over, you actually bill them. You send a bill. You may have an estimate before. See, estimate papers showing estimation of expenses is not a bill, right? So let's say I want to do some carpentry work at your premise. Let's say I'm the service provider, right? So I came to your place. The estimation was 50,000, let's say, and you paid me 50,000 rupees, let's say. But I have not started the service. Now I have started the service. I have completed the service, and somehow according to my bill, the bill I am making is 51,000. Right? But remember, I have not made the bill yet. If I haven't made the bill, I haven't given the bill, but the services have been provided. So when the services are provided from your end, it has to be recorded as a revenue. So you will record this as a revenue, but at the same time, because you haven't billed them, or they haven't paid you yet, because you haven't sent a bill to them, I'm calling it unbilled revenue. You can also say debtors account. That is also fine. But just to make it more clear that you haven't even informed your debtors yet because you could not prepare the bill invoice before the 31st March, and just because, or 28th February in this case, and because of that, it stays there as an unbilled revenue. Unbilled revenue means you have not prepared the bill and you haven't sent the bill to make the payment, but it is a revenue for you because you have provided services. Accrual concept. I hope everyone understands, right?
Yes.
Yes, sir.
Yes. So unbilled
Sir,
means the
I
bill
have
is
a
not. Please ask me, beta. Please ask me.
Sir, dividends, do we have to record in the profit and loss statement, or do we have to record it in the balance sheet?
So it is a very similar to the last class question or last to last class question. Dividend is showing you which balance, beta? Tell me.
dividends will be showing us a debit balance
What does it mean?
because it is a part of the profit that we are giving to
So
our
it, no,
stakeholders.
that I know, you understand the concept. I totally know. But if it is showing a debit balance, that means it is the distribution of profit. It is negative equity beta. It is not a liability. It is a liability when you see dividends payable. You see dividends payable if it is not paid. So dividend account is separate and dividend payable account is separate. So here they are talking about dividend account, debit balance. Make sense,
Okay.
beta? So you are talking. So
Okay.
whenever you see debit balance, it is a distribution of profit or negative equity.
So then we'll subtract it from the equity in the balance sheet.
Yes, yes, yes.
Okay, thank you,
Or you
sir.
can also record this in the profit and loss appropriation account. I think you seem to have an accounting background. So you know companies also prepare third statement, that is statement showing owner's equity or statement showing profit and loss appropriation account, right? Yes, question. Please ask me question, beta. Devansh, ask question, beta, please. Is this dividend paid by a company? Do you see dividend payable anywhere in the trial balance? No. So it is. Must have been paid. If it was not paid, then you will see dividend payable as well. So it is just showing a debit balance representing reduction in the profits with the company. That's it. Fine, Devansh. Fine. Sure. Understood. Please say yes. Yes. Okay. Great. Huh. So then we have unearned revenue. Unearned revenue is a liability because you have not provided the services yet. You haven't earned the revenue, but you have received cash. So that is a liability, of course. Salaries payable is a liability, not an expense, right? This is not a salary expense account. This is another account. Salaries payable, a credit account, right? Share capital is a liability. We know that equity, of course. Retained earnings is equity. Dividends are negative equity. Revenue from services is a credit balance. Revenue, income, salary expense, expense, office supplies expense, telephone expense, rent expense, depreciation expense. All these are expense. So transfer all the incomes and expenses in the income statement. Transfer all the assets, liabilities, and equities into the balance sheet and tell me the profit as well as balance sheet total, please. Please, students, participate and tell me. I'm giving you 2-3 minutes time, please. Himal is there. Himani or Hemali was him is there. Or Hemal, I don't remember her name. Hemal? 14,820 balance sheet. Let me see, beta. I will answer only when I see the answer. I need to shift. Yes. What is the income statement answer, beta? Vikas ji?
Sir, 2290.
2290. Okay.
290.
Assetites. What does it mean, beta? Assetites means? Assetize? Okay. Asset side. Okay. You must comment. Net profit is 2290. Nirali is also getting 2290. What is assetites? Ties, beta? Asset side you meant?
Sir, just a typing mistake.
Okay. Huh. Okay. Fine. Fine. Everyone is getting the answer 2290 or whatever or not? I have to check, Rashi ji. I have to check. Good, all of you are participating. Really nice to see. Okay, so is shall we look at the income statement, or you want 1 minute or 2 minutes? Shall we look at the income statement? Please participate.
So 1 minute more.
Sure. Where is Rachel? Rachel is not participating. Rachel is there. Nirali Shah, you are also. No, you participated today. Amol Sodani, are you participating, Amol? Amol?
Yes, sir.
You are following, na? Okay, my mic is
Yes,
not
sir.
working. Fine, Rachel, yes. Aniket Jain, are you there? Aniket Jain? Yes, you are there. Wonderful. Okay, shall we look at the answers, guys? I have given you enough time. Say yes or no. Say no in case you don't want to see. I mean, I can wait. Yes. Everywhere, no one is saying no. Fine. So this is how it looks. It does not show the classification like gross profit and net profit, but you should do that ideally. In this business, back bay company, it may have all the indirect expenses because it is in a service sector. So in service sector, it is always difficult to find out the direct expenses, right? Because you always have multiple people working on multiple cost objects. In that case, you have all the indirect expenses. That happens in certain sectors, right? So in that case, you may not have direct expenses. I'll give one example. Let's say I am hiring someone to do carpentry work, and they are running a firm, let's say, and there are 3 people working on all the furnitures. Now, in that case, you cannot say who is working on what. So their salary is always indirect. Right? So that is how it is. In certain businesses, in service sector, most of the expenses are indirect expenses. So similarly in this case. So the answer is 2290. That is matching. Now they have shown a calculation of equity here. You could see the second table, statement of retained earnings. So that shows the computation of retained earnings by the business this year. So the retained earnings opening balance was 2100. This year the profit is 2290. This is just computation. There is no debit and credit. This is just a simple statement. Minus dividend paid during the year 1400. So this is debit beta. This is debited in the statement. So retained earnings left for at the end of the period is 2990, and that belongs to the equities or equity shareholders. So you can see 2990 is added in, or it is shown with share capital. This is balance sheet, guys. The total is 14820, as everyone was saying. So all of you. So you see depreciation is shown. Means the provision for depreciation is shown with the equipment. Office supplies are shown. Debtors, all these are assets, and then we have liabilities. There is no classification, current asset and non-current asset. We may be discussing that in the future sessions, right? So how much time we have left? I think we have 5 minutes. Let me see that. It's 3:18. So do you have any questions from the earlier? Because some student had mailed me. She wanted me to discuss, but she's not there, I think, today. She is on leave, I guess. She's absent today, so we may not be able to discuss earlier questions. If you have any questions, please ask me. Otherwise, I'll shoot questions to you. Yes. Hello,
Sir?
everyone.
Sir,
Yes.
Sir, in the trial balance, two depreciation amount has been shown. One is 250 and other one is. Sir, can you please show? Yes, sir. So one is 250 and other one is 1250. So, sir, which amount should we take into consideration while while deducting the balance from the balance asset side of the balance sheet?
While preparing the balance sheet, right? That is what you're saying. Ask
Yes,
yourself.
sir.
250 is what? Tell me. 250 is what? Tell me.
This
Rupees expense.
this year, yes, sir.
So,
This year
expense goes to which statement? Tell me.
income statement.
What is accumulated depreciation? It is a contra asset, right?
Yes, sir.
It goes to balance sheet,
Okay.
right? So
Okay.
what
Okay.
I'm saying is this 1250 already includes 250 beta. Don't forget the entire accounting process. The trial balance is coming prepared after the transactions are recorded, after the transactions are journalized, and the transactions are classified into T account. So this 1250 includes 250 because the journal entry has been passed, and that is how it is appearing in the trial balance. आई होप यू गेट इट बेटा.
Okay, sir.
ट्रायल बैलेंस में तभी
Yes,
आता
sir.
है जब आपने एंट्री पास किया हो. तो पास कर दिया एंट्री हमने, कंफ्यूज मत होइए बेटा, है ना.
Okay. Okay, sir. Thank you, sir.
थैंक यू.
Sir, unbilled revenue will be classified as an asset, not
It is
until
an
the bill.
it is an asset, but look at the balance. It has a debit balance. So whenever it is having a debit balance, the half of the problem is solved. Why? Because it could be an expense or it could be an asset if it is a debit balance, right? Now
Yes.
it is not an expense, so it has to be an asset. There is one simple way or stupid way of figuring out, right? But let us look at the logic. Unbilled revenue does not mean unearned. Unbilled revenue means you have not billed, you have not what do you say, you have provided services but you have not prepared an invoice. If you have not
Yes, sir.
prepared an invoice, the debt would not pay you, the customer would not pay you, but the services are being provided, right? So services are provided, so it is, so revenue is an income, but at the same time you have to receive this money from that person. So that is, this is representing that amount, the amount receivable from that entity. But because you haven't prepared the bill, you cannot call them debtors. So it's it is similar to debtors, yes.
But we cannot say it as an income because, like, I mean, shouldn't
If
it be
you see,
classified as a
it
revenue?
is already added into the revenue. It must have been added into the revenue, beta. Understand? It is, see, there are two entries, right? There are two effects, right? On-billed revenue account debit to revenue from services. So revenue from services account 9010 already includes this beta.
Okay, sir.
Okay, or do not get lost, beta. Trial balance is the summary. So this account, this transaction must have been recorded when that happened. So unbilled revenue account represents asset. Why it is an asset? Because the amount would be paid by the customers when they receive the bill. So services provided. So services provided, you have earned the service. You have earned for your service. I'm saying when you earn for your service, has to be recorded as an income, right?
Yeah. Okay, sir. Oh, thank you, sir.
Welcome, beta. Anyone has? So let me shoot some questions to you. If no one has questions, and you will answer them. Devansh, yes, Devansh.
Sir, I have a question, sir.
Please ask me.
Sir, so we have now seen how to make balance sheet and income. So how will we, how will we judge the if it's like how is the company working? Will be able
So
to
that we are going to discuss in the term one session, because can you really judge based on one balance sheet or income statement, beta?
No, sir. No, sir.
Can you really know? So see, imagine if you are alone, or if the company is alone in the world, then it doesn't matter whether that company is good or bad, because company is the only one. So it makes sense only when you are comparing, or you look at your performance with the previous performances. Understand? How do you know you did well in this year semester examination? By comparing yourself with previous semester examination, right? Similarly, this looking at this alone does not help, of course. Of course.
Okay, sir.
Yes, yes.
What?
I'm listening.
Where
beta.
is the dividend amount mentioned? 1400.
Can you see the statement of retained earnings?
Okay.
It has been adjusted separately, or you don't do this. You do one thing, beta. You show.
Sir, I have directly deducted from P&L account.
Oh, you can do that. That is also fine. That is also.
I am also getting the same total, but my net profit is getting 890.
That is because of the presentation, the way you presenting.
Yes.
That's it. Let us not get into mechanics. That is fine. Yes, yes.
Sir,
हाँ?
sir, but you told dividend में, sir, but you told dividend is equity में आना चाहिए था ना वो?
हाँ तो बेटा क्या हुआ देखो, ये रिटर्न अर्निंग्स किसको बिलोंग, लेट मी कंप्लीट बेटा, ये 2990 कहाँ से आया पता है, यहाँ से आया देखो, Can you see the cursor? Can you see the cursor? Can you see the cursor, beta?
Yes, sir.
हाँ. So 2990 यहाँ से है. This 2990 is after deducting dividend, right?
Yes.
So it has been captured, beta. It has been captured by reducing the retained earnings. So because
Okay,
the retained earnings have been reduced, that means the claim of the equity or the claim of the owners that is in equity has been reduced because equity represents retained earnings also, right? So it has been captured. Don't worry. It is just deducting from one other place. That's it, right? It is not deducted
Okay.
directly. This is because they're following a particular format. That's it, right? Yes. Any
Sir,
questions, guys? Yes, ask me. Yes, ask me.
sir, accumulated depreciation accumulated over the years, like from the previous years,
Sorry,
and the depreciation expenses for the current year, right?
accumulated depreciation is the depreciation till date, and depreciation
Yes,
expense is the depreciation of this year. That is why it
of
is
this year,
recorded in the
yes.
income statement. Yes, very good question. Yes.
Exactly.
Yes. Can you show retained earnings once again? Yes, yes. Please take the snap also, please. So, guys, I'm shooting some questions. Answer them. Yes. Which one is correct? Tell me. There are 4 options. There is a formatting issue. Tell me which one is right. Okay, C, A. Someone is saying. See, whenever there is an expense, please, guys, someone's phone is ringing. It has to be A, guys. It has to be A because whenever there is an expense, what happens? The economic benefit reduces. So the answer is A. Answer is A. So imagine let's say for let's say I'm hiring some carpenter, and so what happens? Whenever I hire a carpenter, I incur some cost. My cash reduces, means my economic benefit reduces, or if I do not pay, my liability goes up. So it is a result of reduction in the asset, that is cash in this case, or liability increasing, right? Because I have to pay them in the future. So the answer is A, of course. Very good, very good. Good attempt. Can you answer this one? Today's a very favorite question. Right, because the economic benefit exceeds 1 year. Very good, very good, very good, very good. Please ask me question if you do not understand the question. Huh? Okay, someone has put A without thinking. See, I have not selected all the questions with A. Please think, beta. Vipasha. Yes. Sorry, it's okay, beta. Vipasha, बताइए क्या आएगा? I want to see your answer, Vipasha. It was okay. Fine, fine. I understand. Yes, yes. The answer is, see, understand the benefit has to be for 3 years. Now you are doing that at the end of first year. So out of 60,000, 20,000 is exhausted. So 40,000 is liability and 20,000 becomes expense. Very good, very good. This is a very simple question. I'm asking the 4th question. Very simple. Almost done, sir. Yes, sir. No, हमारे पति almost. Yes, sir. खाली yes, that's it.
Sir, please can you type the last question again? I was exited by mistake from the meeting. I couldn't see the question.
This question?
Yes, sir. Thank you so much.
Do you have classes after this?
No, sir.
Okay. So it's 3:30 now. Thank you so much, guys. I hope I have added value to this course. I hope you have understood something basics of accounting, and you are prepared to face the next term accounting course. Uh, I have enjoyed teaching you guys, so I hope you have enjoyed as well along with me. So thank you so much. So anything you would like to say before I end the session?
Yes,
Anything?
sir.
Thank you, sir. For science student, it was very helpful, sir. Thank you.
I hope all of you
Thank you
enjoyed.
so much, sir.
Thank you so
Your
much.
examples were so relatable, so apt, sir. Thank you so much.
Welcome, beta.
Cleared
Welcome.
many doubts. Thank you, sir.
Sorry,
Thank you,
sorry.
sir.
Thank you so much, sir.
Sir, you cleared many doubts. So it was
Ha,
very
thank you, beta. We will
Sir,
definitely
you,
meet. Yes,
sir,
yes,
you
yes.
have always been very patient with our doubts.
Yes,
Yes,
yes.
sir.
Thank you so much. Yes, we'll be meeting soon in the classroom, Term 1 class. Thank you so much. Thank you. So,
Yes.
sir, I end the meeting.
Thank you, sir.
Yes, sir.
Yes, sir.
Thank you, sir.
Yes.
Thank
Thank you
you,
so much,
sir.
sir.
See you soon in the classroom. Hope to see you soon in the college as well. Bye bye. Yeah. Thank
Yes,
you.
sir. Bye, sir.
Bye-bye.
Have a nice weekend.
Yes, thank you so much. Thank you. Thank you. Yes, I'm ending the meeting. Thank you so much. Bye bye. Yes, I'm ending the meeting.